Raymond Chan, Chief Investment Officer at Allianz Global Investors Asia Pacific, which helps oversee about $15 billion in Asian assets, joins us this morning. Raymond, what a way to kick off Q2. We're seeing gains across the board. Now, I thought closing Q1 was all about window dressing. Are you surprised by the strength we've seen in stocks so far this year?
No, not really. Actually, since the beginning of the year, we've been actually pretty positive on the Asian markets. And basically, the reason why we are positive is actually the markets are very cheap. If you look at the valuations, I think we haven't seen really this kind of cheapness that we've seen for a long time. So we actually maintain a positive view on the market. And in March this year, we start to see some correction. And we believe this is still a correction. So we expect by the end of this year, we will see a higher market.
A higher market at the end of this year. We're already higher in Q1, so we have a pretty good base to start off from, I have to say. How much higher do you think markets might go?
That's a difficult, thing to say. But I believe actually the reason why we expect a higher market is because the governments, the countries, the central banks, in this part of the world actually still going through a easing mode. So we expect actually more easing to come, number one. Number two, we expect actually the concerns on the earnings is starting to dissipate. We're actually seeing the earnings revisions actually more or less bottom, and going forward, we should start to see some positive earnings momentum to come through, especially in the second half of the year.
What about the concerns about China? Hard landing, slowing down? What did the PMI numbers this weekend tell you?
Well, that's a very good question. We never actually believed China will go into a hard landing. Having said that, a lot of investors I talked to, especially in the U.S. and Europe, they're very concerned about China's hard landing. We actually expect, we believe actually China has a lot of policy tools that they can use to avoid this hard landing.
But why are they not easing up on RRR cuts? I mean, we haven't seen that for a while, even though the market seems to be calling for it. 100% of economists we surveyed have said that we should expect one, and then I think they're pretty much a half-half split on interest rate cuts. But, is China right now slow on policy? Are they behind the curve?
This is exactly the point. I think the authorities in China don't believe the Chinese economy is slowing too fast. That's why they are not really that aggressive in terms of easing. Right, and in fact, the last number we saw, right, the PMI number actually came out to be, a pretty
53
pretty
expansion, basically.
Absolutely.
Yeah. Okay. So you're saying that the Chinese economy isn't doing that badly, then, in your view?
That's number one. Number two, actually, we're still pretty positive on the U.S. economy, and U.S. economy is doing pretty fine for now.
Yeah.
And that actually, I think, will give some positive surprise on the export front, for China. Everyone is so negative on the China exports for the right reason. But if U.S. economy continue to do pretty okay, then the export side of China, to start to see some improvement.
Yeah, they have a market to export too, which is good, right? Okay, so that's why you're overweight Hong Kong, China, and South Korea. What about these the miss on CPI numbers that we got this morning from South Korea?
Well, I think, the inflation, we don't really see inflation is a big issue in the short, medium term. There might be some issues, in the very, very short term. But if you look at actually everywhere in the world, right now, inflation is still not an issue. Yeah,
it's not an issue. That's why the central bank is still, around the world can still be easing, right?
Exactly.
And then you're underweight India and Australia. What are you seeing there?
Well, India, actually, we like the country, the market in longer term, but actually at this point of the cycle, they are actually going through a down cycle. The industrial sector has expanded, a lot, and they spend a lot of capex, and we believe the earnings cycle is going to go through a downturn. And that will take a while before we see the earnings picture going to stabilize. And that's the reason why we underweight India.
And you're saying that there's select opportunities in technology? Where?
Oh, very much so. Everything to do with
Apple, of course.
You got it. So Apple-related names, in Asia, especially in Taiwan, will continue to do well. We are a big, fan of that.
Right.
Yeah.
I'd like to find one person that says sell Apple. I would actually be interested to hear what he has to say.
There will be a time, though. Make sure you invite me back.
All right, Raymond. Let me know when you guess change your sentiment. Raymond Chan there, Chief Investment Officer of Allianz Global Investors Asia, joining us.